Jamie, the FX market seems to be having quite a moment right now in the spotlight. Why is that?
Well, I think there are a couple of things that have been going on, and it's not so much as the moment as it is kind of the evolution of a bunch of moments. We've gone through a period of enforcement. We've gone, as a result of that enforcement, through a period of regulation and preparation for regulation, and then we've launched regulation specifically in the form of MiFID II. So there's been an interesting period of reflection as the market is reacting to this large trend that's really impacting it, both impacting the sell side and the buy side, the providers of liquidity and the users of it. And so the moment, as you say, is probably becoming more prominent now. But it's really been an evolution that's sort of come to this point.
And you mentioned the buy side, which seems to be emboldened a bit right now and really sort of coming together and maybe having a louder voice, as it were. What's behind that?
Well, I think a lot of it is education, realization. If we really think about this community, this capital market community, technology has had a major impact. One of the groups that hasn't been quite as impacted as others has been the traditional buy side. So because of this overall trend we just talked about, the buy sides become much more focused on the quality of their execution, and other participants have come forward in the market to make them more aware. So for instance, in foreign exchange, the birth of transaction cost analysis. This is still a reasonably new trend. Did it exist before? Yes. Was there a need for it to be really a focus? No, not until we started to get the MiFID II best execution elements influencing the market. And as a result, the buy side started to focus on who owns the fiduciary responsibility for trade in the FX marketplace.
Right.
You know, how do they need to look at these almost mechanical transactions that in the past have been seemingly more administrative, but actually are quite critical in terms of performance. So I think there's been a number of confluent factors that have helped the buy side realize that this is an important time for them. You
mentioned MiFID II and this notion of best execution. What did MiFID really sort of spur with people? Because FX was not something that people necessarily initially thought about when trying to unpack what MiFID meant. How did it come into the FX world?
Well, it's a great question because nobody likes regulation. Nobody in the capital markets likes regulation, and I don't think in our professional lifetimes, whether it's Sarbanes-Oxley or Dodd-Frank or MiFID II, anybody runs out and embraces these things and says, this is terrific, let's go for it. So there's a little bit of fear that becomes a motivator because they're deadlines. We have to do certain things. MiFID II is a very, very comprehensive set of regulations that affects all of the parties in the EU. As a result, there are a lot of U.S. corporations that are and investment managers and investment institutions who do get caught up in it because they're doing things overseas. So what occurs? All of a sudden they come out with the next generation of pronouncement about how market behavior should be considered, and they define best execution with more detail. And they don't just make it a best efforts practice. They say you actually have to do these things and you have to prove these things. Well, the real focus is the equity market, the fixed income market, the derivatives market. But the foreign exchange market impacts and relates to all of those marketplaces when institutions are buying or selling securities outside their domestic geographic locale.
And it's so massive too, and as you say, fits into or invades all of it in some ways, or pervades, I should say, all of these different markets.
Well, if you think about it, when someone is, some of the markets are pretty efficient as it relates to execution costs, and they're transparent. In foreign exchange, an asset manager may decide to make a portfolio manager make a big call in terms of buying or selling a foreign security or set of securities. The underlying FX trade and the cost of that trade and the efficient execution of that trade has real ramifications for that investment company and what they're doing. If they're not paying attention to it, they can pay a lot of money that they're not going to see because, again, there hasn't been this transparent focus. And frankly, the buy side portions of the buy side. I don't like to lump them all together because there are very sophisticated asset managers who have been very focused on their costs. There's a wide swath of other buy side institutions and asset managers who have been less so.
Right.
MiFID II kind of levels the playing field and says, you want to know what? All of you have got to follow a certain standard of conduct, kind of a way of doing things.
Right.
And it's not the best price. This is the confusion. Unfortunately, it's misnamed. Best execution is not something that is an outcome, right? It is a process. And best execution is something that you have to follow every day. It's like the golden rule,
right?
Taoism. I mean, this is not something that you go, boom, I did it, and there it is. I got the best price in the marketplace. This is a $5 trillion marketplace with liquidity and transactions occurring every microsecond around the world. The idea that someone could say, that's the best price that was available in the market at that time is kind of a fleeting assumption.
Yeah.
You actually have to perform and approach every trade in a fashion that allows for a best execution process to occur.
I want to ask you briefly about, you mentioned conduct. Obviously, there have been some fines and some scandals around this market. Owing in part to this lack of transparency, how much has that affected the rulemaking and behavior?
Well, it's if we talk about the market participants, it's a general wake-up call. They're bad actors. Bad actors and bad actions obviously get magnified, and it brings and draws attention to what could be market practices more broadly. So some of these incidents that were identified then caused reaction, and so for instance, the liquidity providers in our market, which are principally the major banks, came out and made statements about the way they did business. They didn't really change the way they did business. They just clarified their role, and they are the fundamental providers of liquidity in the market. The buy side got the wake-up call and said, I wonder if I ought to pay more attention to my executions. I wonder if I should avail myself of pre-trade market intelligence and then focus on post-trade transaction cost analysis, and maybe look for attributes in the liquidity where I'm actually executing my trades to kind of benefit ultimately my customer, my asset management customer, because the asset manager is playing a fiduciary role. So it impacted both sides.
So finally, what happens from here? Has this been a real secular change in the market? You don't really go back to darkness once you've seen the light, right? So what happens in the short term from here?
Well, it's a great point. Transparency as a trend doesn't reverse on itself. It's going to continue. But this is a vast market. This is it's so large, and it operates 24 hours a day, 5 days a week. I personally believe that we have years to go, because you and I are talking about a portion of the market which fundamentally is what everybody's used to, which is spot transactions, the exchange of one currency for another. But even within the currency market, we have forwards, we have futures, there are options, there are swaps, obviously, and a whole array. So the transformation of this market and its pursuit of transparency and fairness, I think, is something that's going to have an interesting start date, which was January of 2018. But I think we've got a good 2-3 years to go for the further development and the introduction of more products that will serve the buy side better as they pursue this best execution.